Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Wednesday afternoon. I'm Juliette Sarli. Great to have your company as we rebound on this Wednesday afternoon. Let's have a look at where the local market is tracking as we round out the session in a very solid day. Up 1.5% there on the CBO 200. The S&P ASX 200 also tracking higher, up 114 points or 1.3% as we head into match off to 8,794. The banks really leading the way. The material stocks also high, industrials and REITs. Where you have seen weakness, of course, no surprise, is in the energy space as we continue to monitor hopes of a de-escalation in the Middle East and therefore lower oil prices. Also consumer staples coming under pressure and consumer stocks in general in the wake of that third rate hike we got yesterday from the RBA. Had quite a few chats today, including Jason Todd from 10Cap, among others, saying that, yeah, at the moment they'd be staying away from some of those consumer discretionary stocks. But in terms of the themes of the day, it certainly was about bouncing back. We also had some really interesting commentary, I should say, from economists on the back of the RBA's rate hike. Andrew just spoke to Diana Messina from AMP. She's really urging or hoping that the federal government doesn't put too much handbacks, if you will, into the federal budget next week, because that is just going to stoke inflation further. But today we had fueling up, budget pouring $10.7 billion into emergency stocks, with the government expected to establish a state-owned 1 billion litre stockpile of diesel and jet fuel and help refiners and importers lift their minimum required stocks. Also digging the data centres, a lot of focus on DigiCo today after the developer announced it had sold its Chicago site for $1 billion. It's looking to offload its North American locations in favour of expanding its flagship Sydney data centre. So we did see quite a bit of uptick coming through in these data centres today. Let's have a look at where they're finishing. Infratil there also had some corporate news we'll get to in a moment, up 14%. DigiCo there up by about 24.5%, very impressive. And lifting the likes of NextDC, Goodman Group, Macquarie Tech as well. I mentioned the banks also had a good day today. CBA up by an impressive 3%, $177.64. Of course, they're going to benefit from these higher rates. Macquarie Group up 1.7%. But energy was a laggard. Having a look at where the energy stocks are, with the exception of AGL, which had some corporate news out as well. Woodside Energy down by 2.7%, Karoon off 3.3%. Now, in terms of other corporate news, JB Hi-Fi was in focus, down 6%. The CEO warning of cost pressures and supply constraints due to the Middle East war. We've touched on DigiCo there, but also Infratil was in front runner, I should say. Jumping in fact to a record high as CDC landed an Australia data centre deal. AGL there says it's well placed for at least the 3 months of a global fuel crisis, and also narrowed its full year earnings guidance. And Atlas Arteria a little higher, it rejected IFM's unsolicited takeover offer of $4.75 per security. Well, the stock of the day was one of those big front runners, Infratil. Andrew spoke to our experts, Philip Pepe from Sharon Partners, Michael Gable from Fairmont Equities.
Couple of things I would point out. It is flavour of the month. Some will argue stronger for longer. Always at least consider valuation, how much has been priced in. That's a volatile share price. You can see people loved it in August, hated it in February, March. Now it's back in vogue again. Consider, are they a pure play data centre operator, or do they have other assets that people have stopped talking about because of the excitement in data centres? Consider what you're paying for. Consider their ability to deliver on time and on budget. There's a lot of talk about the data centre build. There's still a debate about how we're going to fuel the data centres. How are they going to get the energy they need?
I'd be happy to hold it here and just maybe see if you can hold on to those gains and maybe squeeze another couple of days up. I wouldn't be buying it here, that's for sure. So, happy to hold and maybe look to see if you can get a little bit higher before selling. But agree with the key points. It's not a pure play. They have renewable projects as well. They're trying to divest those. The flavour of the month, I think that's that is a big thing to consider.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, The right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAM, retirement income done differently.
All right, welcome to the COB, our Wednesday guest, Kai Chen from MPC Markets. Good to see you, Kai.
Good to be here.
On a very positive day. What do you think was behind that?
Oh, yeah, exactly. We saw a bit of strength overnight in the US, and of course, Trump coming out. It's still not resolved, but I think there's a little bit more hope that there's a conclusion to the Middle East conflict. So I think that's really what's giving the market a bit of buoyancy. But really what's performed well today, one, the data centers, and two, the banks. They've all done spectacularly well.
And I gather the banks did well because of what Michelle Bullock and Co did yesterday.
Yes, exactly. So I think it was a widely expected rate hike. And given, obviously the inflation print that came out last month, I think it was taken that Michelle would have hiked. So, but it does really play into it. Bit of cost of living pressure continuing, and if on the household budget for people who do own homes, it's a bit of strain.
Yeah, it certainly is going to be, and we've sort of crunched the numbers with AMP as well in terms of what this means, plus coupled with the fuel shock. So with that in mind, would you be sort of staying away from consumer discretionary stocks?
Yeah, absolutely. I think it's probably not the right cycle to be holding, and we're seeing this in JB Hi-Fi as well. It's a slightly different problem where they're meeting with supply chain issues. But I think just in general, the consumer discretionary stocks are probably not the right time to buy.
I think it's so close to COVID too to be dealing with supply chain issues again. We've all got a bit of PTSD. Where we are seeing a lot of investment though, those data centres, DigiCo, Infratil today. Tell us what you're seeing in that space.
Yeah, no, absolutely. We're seeing really big resurgence in the AI and data centre thematic overall. And it's led by the US. So over the last couple of weeks, we have seen a lot of strength in the US, a bit of pickup in activities. Specifically, say for example, Lam Research, which is a semiconductor company, they're actually quite big. They produce semiconductors domestically. And I think just in general, a lot of the data center spend is continuing to rise. So, that's a pretty strong thematic.
Is there any other than DigiCo Infratil that you've got on your radar in the Australian market?
Next DC.
Yeah.
I think that's kind of the obvious choice if you're playing data centers. As a pure play, Goodman Group, of course, as a blue chip, they have a lot of infrastructure coming online.
So we are seeing a bit of a dip in energy stocks, but the end of this war is, far from over, at least. That's how it seems, and the supply shock is going to continue somewhat. So what do you see in terms of further upside for some of these energy players that did get sold off a little today?
Yeah, no, exactly. I think the long-term resolution is still not quite clear. I think it is going to peter out and they will reach some form of agreement. So, I think the market's fairly optimistic seeing that play out. But in terms of the actual supply coming back online, there's a lot of infrastructure that's been damaged. Also a little bit of logistics in terms of how the strait will be or should be reopened. So, there's still a couple of challenges to come along. And this is why we're seeing the oil curve really, at the start of the war, basically the price of oil in the close expiries went up quite a lot. But they were expecting a quick resolution. But now, what we're seeing in the market is basically a longer time to resolve this issue.
Let's talk as well about what you see with resources, because 2026 was meant to be their year, then the war happened. More broadly, do you look at any of the mining players and like them, or are you sort of just being selective at the moment? I
think lithium is probably the standout. BHP and all the iron ore stocks, they've been actually going up quite, steadily. But the real standout is basically lithium, and it's of course to do with the energy crisis, transition to green energy, as well as switch to EV. So, I think I'm medium term fairly bullish on lithium. So I still think there's a way to go for that thematic. It's been so underpriced, the previous 2 years. So, I think it's still got a bit way to recover.
It was interesting, Regis and Volt were down today on that news of a merger which would create the third largest gold miner. Volt rallied yesterday. What do you think that you're seeing from that reaction there in terms of, whether or not we've had a bit of fatigue with some of these gold tie-ups?
I do. I think it's tied to the underlying. We came off the highs close to January and, it's really it's been classified as a risk-off commodity in the last couple of months. So basically, if we're seeing, the resolution in the Middle East comes through, I think the precious metals will continue to go up slightly. But at the moment, it's really not going anywhere. It's not the same bull run as last year. It needs a period of time to consolidate. But I think in the medium term, that trend still maintains because, dealing with inflation and a lot of the things that's to come, I still think it's a good thematic.
And speaking of things to come, we've got the budget next week. What are you expecting? What's going to be the implication for investors?
Oh, gosh. Some pretty big changes to come through. 3 big things: negative gearing, capital CGT tax discount, as well as trust tax. So, it's been, I don't know, I'm fairly negative in terms of how it's been pitched. It's aiming for equality, but I think for people who haven't, in the younger brackets, who haven't had the chance to buy these assets, when they buy, they will get taxed more. So it'll be interesting to see what they pass down, but I think it's really just to balance the budget and tax it a bit harder.
Yeah, certainly interesting times. All right, Kai, always appreciate it. Thank you so much. Kai Chen from MPC Markets there with us. The market has closed. Let's have a look at the leaders in today's session, including Infratil, up by 14%. IGO is up by around 6.7%. Sims, Liontown, Capstone Copper, all there as well. The laggards in today's session include Magellan, off by 8.3%. Life 360, JB Hi-Fi we touched on there after its corporate update, and also Lottery Corporation. Now, this is a stock that came through with an update yesterday. Brokerage is really flagging cost drag from its license extension. So on Tuesday, the lottery operator said it had secured a 40-year extension of its Victorian public lottery license for 1.15 billion, and 40 Medical there as well, down 4.7%. In the small end of town, Adician had a good day, up by about 28%, and really just a lot of materials players there, while the laggards in the small end of town included these stocks on your screen, which were also in the materials space, with Globe Metals and Mining down 15.4%. Tonight, earnings continue in the US. We get some big ones: Walt Disney, Uber, DoorDash, Novo Nordisk and Snap. Also, of course, the ADP non-farm employment change. Tomorrow, locally on the docket, we've got good trades balance for March. A surplus is expected to be lower there. Also, a quarterly update from Block and first half earnings from Orica and Fleet Partners. But it has been a positive session on the market, I should say, rebounding from losses that we've had over the last couple of sessions on these hopes, as Kai mentioned, that we are expecting or hoping that there will be some kind of extension of the ceasefire or resolution to what is occurring in the Middle East. Robust gains in New York overnight, led by a rally in tech stocks, and President Trump did announce that an American naval operation to guide ships through the Strait of Hormuz would be paused in a bid to get Iran to agree to a peace deal to end the conflict. The S&P ASX 200 finishing the day's trade up 1.3%, 113 points, 8,793, and it's up 1.2% over the last 5 days. On that positive note, we'll leave it there. Have a great and safe evening. We'll see you again from 9:45 a.m. Eastern tomorrow.